All right, welcome to our channel. Today, we've got some breaking news regarding Iran, and I want to discuss the housing market, inflation, and other costs to a potential war with Iran. In my opinion, things have really the shit has hit the pan, and I think it's important to discuss some of the outcome. Whether you're a renter, a homeowner, or you participate in federal programs, we need to consider some of the costs of any war at this phase of this administration. Okay, I want to hear from you guys politically, religiously, and even factually based. What your thoughts and ideas are about that. Remember to attack the subject matter, not me. I'm just here to report the news. So let's go over a bit of what could be considered if a war could pop off in any degree with Iran at this point. So, a few things I want to cover is the inflation part. But first, I believe with Iran sitting near major global oil and shipping routes, we could potentially be looking at higher gasoline prices, more expensive deliveries, higher airline and trucking costs, higher utility costs. Then I think on the secondary market, affordability for housing could get a lot worse. Housing usually gets hit directly, so it would create a potential chain reaction because when you have higher oil, higher inflation, pressure and interest rates, and then you end up with more expensive housing. So some of the potential impacts would be mortgage payments increases, buyers qualifying for smaller loans, existing homeowners staying put, fewer homes hit the market, and of course, affordability for those that are low income. According to some of the more recent housing analysis tied to the conflict to mortgage volatility and also affordability pressure with mortgage rates above 6% during this period could create further escalation. Another thing we need to really consider is rents because those have been on the push very recently and also since the pandemic. So renters often feel more pressure in the rental market, and some households are delaying buying. Apartment construction may slow, operating costs and potential costs will rise for landlords. Those costs may include insurance, maintenance, fuel, repair, property management, and even construction materials. So moving from there, we've got housing affordability, and those that are in Section 8 housing and low income housing may feel a direct or indirect pressure with this because the war does not automatically change the rules and policies of Section 8 rules, but it certainly can create inflation. So federal spending and the rise of policymakers may need to debate housing budgets, voucher funding and its growth, new affordability and construction, and local housing authority spending priorities, considering some of the pressures this war might create, whether it's temporary over a long term. The effects tend to happen through a budget cycle rather than immediately. So in other states, we could see temporary effects on gas spikes, small housing impact, rental. They think that rental mostly should remain unchanged, but they're not unsure at this point. If a higher if the conflict reaches a higher level, then we could have higher inflation, higher housing costs, slower home sales, more rental demand, of course, with higher renter rates, and then a continued affordability pressure. I call it hyperinflation, to be honest with you, but at this point, we need to consider all options. So I think that it's good to just think about this. It doesn't mean any of this is going to happen. I just think that we need to think about some of the costs here. Clearly, things need to happen with Iran, and I'm not a political guy for wars, okay, but I'm just suggesting that we're already at peak pressure, in the nation and cost, and some things are improving and other things are not. And so, I really want to hear from you guys what your thoughts are on this. Just keep it civil. It's important to share ideas and concepts, but I don't want it just to become a bitter or ugly debate over an Iran war. So I imagine, like most things under President Trump's administration, is when he tells you he's going to do something, he's going to do it. Frankly, the fact that he's had this much patience with Iran tells me that likely he was buying a bit of time by negotiating while actually planning this out, because he usually likes to be very well prepared when he decides to take a leader or even have one assassinated. So I think that some of the civil actions and the pleasantries that the administration has traded with Iran at this point was really just a front for pre-planning what they were going to do. So I think that probably we're all going to wake up to some news, and possibly that administration may vanish altogether overnight. Of course, I don't personally wish for anybody to disappear or be vanished, but there's a political stake for all of us involved as Americans. And since we've had other issues with terrorism and other things, we need to be careful and conscientious of how we deal with other countries and how they deal with us, because there can be major repercussions. But right now, I preside in the state of Texas, and I have obvious concerns of the fuel pump. We're just now getting back to $4 a gallon. I sat there today at the pump, and to be honest with you, I was ready to go have a drink after I saw the bill just for a full tank of gas. But I think we've probably gotten used to those $2 prices from during the pandemic. For those, and keep in mind, the state of Texas is a state that produces a lot of oil and gas, so we tend to be the lowest. I can't even imagine what it must be like to be in New York, Jersey, or California when you probably are running $8 and $10 a gallon and more. So really just looking out to see what's going to happen here. So let me say a few highs and hellos, and then we're going to wrap the video up in about 2 or 3 minutes. I want to keep this short and brief. I just wanted to get you guys thinking about some of the potential expectations of the economy, hyperinflation with wars, and of course, the total effect on rents and housing. So I'm going to scroll back real quick. uh, Lake Williams says Section 8 stuff has got me worried. I'm sure it does. We all need to be mindful of that. Emma, it says 100%. Well, thank you so much for the emojis. George Ramirez, you're so handsome. I really like you. I think you. I don't normally get hit on in my own videos, but I'll take anything I get at 50 or so. Emma, thank you, Jay. Emma goes on, bless you and yours. Well, thank you. And the Kiki emojis. Pippi Longstockings, thank you, Jay. Is this is awesome. Uh, Laura's music, Jay, always the push pull roller coaster ride. Well, isn't it fun to be an American these days? At least we have, you don't even have to tune in to HBO anymore. President Trump always provides plenty of entertainment. Nothing, there's never a slow moment. So we get all the entertainment we need through Fox News and CNN and everywhere else. It'll probably, we'll all be bored to death after he leaves office. Short latte, landlords are not picking their feet up on the gas. So when it comes to rent, also with the new HUD requirements, I believe will lose landlords. There's a high potential. I mean, the market's being priced out pretty hard. I mean, we're advancing quickly, and FOMO, fear of missing out on rents. If the neighbor can charge $1 million, why can't I? And so it drives an artificial hyperinflation in the market, and it's driving out even the middle class. So we need to reconsider, everybody coming back from the moon and be a little bit more reasonable about rents, and also interest rates before we end up paying interest rates similar to credit cards just to buy a house. You buy a $300,000 house, and then by the time you pay the interest, it's $1 million home. So we don't want to move into that kind of future, do we? Maggie Smith, I think a very small house might be more marketable, a 3 and 2. I encourage everybody, and I'm a former Section 8 consultant in federal programs. Okay, obviously this video is about something wider, but I will say this, I think that moving into the future, we all need to be reasonable. The days of living in mansions and sprawling properties may not be the wisest idea with maintenance costs and all. Even I've looked at that because with all these costs rising, so will your taxes, and it may be something that's completely unaffordable. I think that's why we see a lot of people that are seniors move into smaller properties, because they don't want to have to be the lawn man and everybody else. They want easy maintenance and lower electric bills, and so there's a lot of things in effect right now. Um, Pika Love says, hello, Jay. Well, hello to you as well. Emma, thank you for the diamonds and award. Maggie Smith, I'm just going live in my van. I'm lucky to have a mortgage, so I'll take my time. I'm glad to hear you have a mortgage. And Emma goes on, always the truth and always prepared, valuable information, appreciated. Well, I thank you guys. All right, so we're about 9 minutes. I'm going to wrap it up here. I just want to break that breaking news about Iran and the potential effects of housing, the market, inflation, gas, and all the other things that can go up, up, up. And remember, we don't actually need this war to happen in order for these things to happen. If the American public believes this is imminent, then things are going to rise anyways. We don't even need to pop up. We don't even. Nobody even needs to take a shot. If the American public thinks this, then they're going to start reacting. It's a lot like a forest fire or a hurricane. If people think it's coming, then they're going to buy out all the bread and the water, right? So inflation, hyperinflation just follows suit with that. We only need to imply there may be a potential to this. And then we see the market start to do some wild things. So just keep that in mind when you wake up tomorrow morning in case there's something new on the news. All right. Have a great day. We'll see you again tomorrow for our next video. Thank you. Goodbye.